Hey traders, this is Travis from 24FX. This is another market analysis for the date of October 12th, 2018. Today is Friday. To give a quick review of the topics we'll be talking about, we'll be getting into some fundamental analysis and also some technical analysis. So we're going to start off talking about the Co2 report, which is also known as the Commitment of Traders. It's a great tool to getting behind the scenes information about what's going on behind the market, who's buying, who's selling regarding commercial, major banks, and retail traders like you and I. So I like looking at that on every Friday. We also will be getting into the dollar index. We'll be talking about the 2-year bonds. We're going to be talking about gold, commodities like oil. We're going to be definitely talking about the S&P 500 because it had a giant bearish fall. We'll be getting into the Euro index, Japanese index, Switzerland index, and also the Canadian index. And then the currency pairs we'll be talking about because we're only here for Forex. But Euro USD, USD Canadian dollar, US dollar Japanese yen, and US dollar Switzerland franc. We're going to keep it nice and simple across the board. And we're going to just jump into it. Right now, what you see on my report on my screen is a 25-hour divergence of currency strength. We'll get back into this, but let's jump right into the commitment traders. So I have the link here. So the U.S. Commodity Future Trading Commission Board actually reports this every Friday, but the news is reported to us on Fridays, but they gather all this information on the following Tuesday. So this week was the week of the 14th through the the 7th through the 13th. So this report was actually accumulated, and the data was accumulated on the 9th, which was the Tuesday. Okay, and it's got released today, the 12th. All right, so they release it every Friday to the public, and it's a great tool to use, and I'll show you why. So we have different future markets. We have the butter, we have milk, so we have commodities, and then when we jump down, we also get currencies. Okay, so we're going through the wheat, and then the first currency that you're going to run into is the ruby, the Russian ruby, and then we have the Canadian dollar. So since we're going to be talking about the Canadian dollar, we can see here. And to give it background story why I think this is important, imagine knowing that the banks are betting against you every single week, right? But they need to unload major money because the retail traders, you and I, we're only 5 to 10% of that money that moves the market. So if you really think you're moving the market, you're really not. I don't care how big your account is. So with that being said, you really need to be paying attention to what the banks are doing, and also these other hedge fund managers and companies like Apple, things of that nature. So you want to know how the money's flowing. So me personally, I'm huge now in fundamental analysis. So I like to use this as my source of information. So what we have here right now, we have the Canadian dollar, and we'll break this down. Non-commercial means your major banks, okay? Think about a major bank, and it's there. They're moving the heavy volume. So this is the first thing that I like to look at. So I like looking at their longs, like looking at the shorts. Really don't care about the spread difference, but it is important to look at. And then we have the commercial. Commercials are people hedging. So think about it like this. If you was a farmer, right, and you sold wheat, and the wheat is not being bought, right? So you're going to hedge against it, and you're going to sell it. You're going to buy wheat on the other end if you was going as a farmer up here buying wheat futures. So if you're a bank, or a country, you want to actually hedge your currency's strength, if that makes sense. So for example, if I just drop my interest rates as the United States, right? I'm going to hedge against that because interest rates, if I drop my interest rates, that means no one's buying my currency. So now I have to go long on my own currency. Okay. So that's how I look at this report. I want to see how the money's being moved, like that Jerry Maguire movie. Show me the money. This is right here. This is the money right here. And then we have the non-reported positions, which is the retail traders, and layman's terms, it's us. This is us. Look at that small little volume, But this dumb money helps move the big money, the smart money, as the market likes to call it, I guess. But anyway, so what we have here is compared to last week, and also this is the last week move, which was released on the 2nd, which is important to know. So yeah, that's what we have there. So on the 2nd, this was the last reporting of change here, which was the first Tuesday of the month. So that makes sense. So looking at the longs, they actually decreased their longs by 3,000. Okay, and they decreased their shorts by 9,000. So that's very important. So decreasing your shorts meaning they're not going short any longer. Buy moves will be coming out. They're gonna be buying up, but not right now because they have a lot of money. You have to look for these giant spikes in the market within volume. So I teach this strategy in my one-on-one courses, PTV. So if you want to know more about the strategy, I'll explain it in depth. But yeah, so just breaking down the Co2 report, like I said, the shorts are actually decreasing, and that's a good indicator down the road if we can get some more buying pressure on longs from the non-commercial, or aka the major banks. Definitely will be want to go long on Canadian dollar. But we also have mixed information regarding fundamentals because of what happened this week with the oil in Canada. Just not in Canada, but oil as a market was given some bad reports. So it actually affected the Canadian dollar. And we'll jump into that in the charts down the road. But putting all that information together is going to give me a good trading point. So let's move down the list. And we have Switzerland franc. So for the non-commercial, the major banks, their shorts now are 27,000. I like to go just round numbers. If you want to round it fully up, we can go 28,000. And then we have for the shorts, for the longs over here, we have 15,000. And the good thing is we have the longs increasing, also the short positions increasing. Not by much. So right now they're not segueing on a big move. And if we look at any of the hedgers, they're not moving anything except these shorts are decreasing. So that's important. I want to keep a lookout, see what's going on here on the coming weeks. So if they're decreasing on shorts, if they're hedging, they know something. They may know that, hey, it's time to start buying. So that's a good sign. So then we got the peso. I'm gonna skip over that. The pound, I'm gonna skip over that. I'm a biased trader. If you're a pound trader, then don't ask me. You should ask Paul. That's just not my thing, guys. But I apologize. Maybe if enough people comment that they want to see more information about the pound, I'll get into it. But to move forward in time, let's get into the yen. So for the yen, we have decreased our longs by 9,000. That's a big thing. I know right now the Japanese yen was our strongest currency out of all the G7 currency pairs. So this is important, and it makes sense because right now, regarding the Japanese yen, we're truly overbought, and there's other fundamental things pushing the reason why the Japanese yen was strong. The two currency pairs that I like to watch to see where the market health and emotion is. If the Japanese yen or the Switzerland franc is a strong currency pair for 2 weeks, that really shows that the major currency pairs like the British pound, euro, US dollar, and Canadian dollar, the market's not confident, so they need to pull their money and their funds at safe havens. And when those two safe havens are increasing in strength, that tells me the health of these economies. So seeing that this is now decreasing their longs, it's going to be time for Switzerland franc to get that power up soon. That's only what that means. Or we may have a good catalyst of information pushing the major four currencies in my book, getting some power. So that's important. And also the decreasing on their shorts at the same time. But this is important. Decreasing 9,000 over the shorts, that's a good spread. Like I said, I don't pay attention to spread, but that's a good difference. And definitely going to be keeping my eye on the Japanese yen. Possible nice short coming up soon. All right, so now we have my favorite, the euro. The shorts are increasing, crazy. So this is also another catalyst showing, hey, it's time to start shorting this thing. You have the Italian bank having some issues. We have I had a brain fart. I apologize. We also have the Italian banks having issues, and also the last past weeks we had. Let me look at my notes. I apologize, guys. It's gonna come to me. I don't want to waste time, but there's certain countries within the euro that been having problems, and it's safe to say like, hey, it's gonna keep happening. Especially with Brexit having been in the news for the last 2 years and nothing has changed. I would definitely say it's gonna be a thing. And if we look into the charts after this, we can segue into that in a few. But when we get into the chart, you're gonna see on a weekly chart base that it just needs to happen. We was actually the euro for the last 2 years was extremely strong and was the leader for the last 2 years. So you can't just be running the market for too long. The market has cycles. So we'll move forward. So that's the euro. And get down to New Zealand dollar. We're gonna skip over that. And usually there's no really need to look at the US dollar. But we also have Bitcoin. If you're into crypto coins, people, I do a private video regarding this information as well. But this is a CO2 report. If you want to see this in more in depth, we do talk about this in our private group on 24FX on Telegram. So you can check us out over there. So let's get into the charts, the big charts. So the first thing we're going to look at is the dollar index. I apologize if you don't know what this is. This is Renko. Anybody in our private group with Paul and I, you'll learn more about this. So let's get this back to the candlesticks and let's look at the dollar index. We're also going to be getting into the bonds market. Everybody who watches our webinars know I love saying bonds because if you watch the Bloomberg report, they call it the bonds market. So it's just something I like to say. So get used to it. Anyway, so now we have the dollar index. We're going to look at this on a weekly chart. So let's pull this up. So on the weekly chart, we have the Ichimoku cloud, which is my blue and orange color. And then we have this purple line, which is representing my 55 moving average. So let's zoom into this. So right now on a weekly, we're definitely in a consolidation zone. And the reason why I say that is because anytime you have candles or price action inside of a cloud, you're moving sideways. And I don't like trading in these zones, but it's strong to say, hey, we're going to have a breakout. And if I get my volume indicator out, there we go. Where's my volume? I guess my indicator doesn't want to show volume. Oh, yes, because, dollar index. But just looking at the body of the candles, I also teach that in our one-on-one videos. If you look at the body, that shows the volume. So the bodies are getting small, and we also have these double pin bars. So this is also showing that, hey, we may be able to break through this and go down further. But the thing is, we need to break this blue line, which is my blue conversion line. That's part of the Ichimoku cloud. So we actually retested off of this. So if we do not break this, the next following week of the 15th to the 20th, then it's safe to say, hey, it's not happening. We may actually break out to the upside, but that's what gonna be my catalyst, and also whatever fundamental news that we have coming. And talking about fundamental news, we do have on trading economics coming up week for the U.S. We have the retail sales report coming up. That's important. And the FOC minute meeting. I apologize. Mittens. What was this? Gloves? Anyway, the FOMC minute meeting. Wow. Tongue twister for me, I guess. But yeah, so those are going to be the two major things that's going to be happening through the week coming up. I'm not going to be stressing. So I think for Wednesday, is that Wednesday or what's that, Thursday? Let me go back. Yeah, for Wednesday, that's going to be a major day. So it may be a little slow these two coming days, Monday, Tuesday. And then after Wednesday, after that news releases at 11, probably after the lunch session and the U.S. session, maybe 1 o'clock we'll get some pumps, and then during that Asian market we'll get a lot more pumps for the US dollar. So it's something to watch out for. So back to the dollar index. So yeah, we break this down. We're definitely on. We have this wall between these two levels, so that's also gonna be affecting the dollar. But let's look at the bond market. Let's look at that a little deeper. Actually, let me pull it up on here. Get markets, bonds. Pull that up. So we have the 10-year going on here. We'll see on the daily, it's moving up. It's on I would say this is a neutral zone, 0.2%. On the weekly, it was actually negative. For the month, it's pretty good. For the month of October, it's showing some confidence here. If we go to Japanese yen, also this is a major catalyst why the Japanese yen for the last 2 weeks were moving well, because the bond market's doing well for them for the 10-year and also for the 2-year. And then we have here the Canadian dollar not doing so well. So this is also another reason why within this week we haven't seen positive information or data for Canadian dollar, hence why it was falling. You have the oil market falling, and then unfortunately the bond. So those are two strong things that, hey, as a trader, you want to look for. I feel like as a trader for Forex, you should know what each country exports and imports are. So that's why I like coming here, grabbing that information, learning, studying on the weekends. So we have the Switzerland franc bond market looking real good, nice and steady. So this is also another reason why I'm going to be paying attention to this, because not the Canadian dollar, Japanese yen, it's overboard. People are going to need to move their money down to this. It's like rinse and repeat, money laundering, I guess you want to say. That's the best way I can give it a metaphor. But yeah, if you're moving your money, you want to go here next. New Zealand dollar, the Kiwis been actually doing some pretty good numbers these last 2 weeks. I'll get into that on another private video, but they've been doing well. Strong pushes on Australian dollar 10-year bonds. Also, not that weak, but they actually are the third running currency in strength. So these are the bond markets. Everything's looking nice and steady. We'll get into it on the chart now for the 2-year for the US dollar. So we have, actually I don't have to type it. I got it here. There we go. Watch list, very important too. So on a weekly, it's falling, very, very bearish. I actually see this continuing. We have this for multiple reasons. If we look from last year, from the start of the presidency of Trump, not saying any of my opinions. I have no biasism for my president. But what I would say is this turn of events also played a factor on the global economy for us and the confidence that others had in investing in our country. So with that being said, our 2-year and our 10-year are falling slowly. But this will be a good time down the road to bring us back into strength. So just keep an eye out on the T notes, especially for the futures on a weekly. If we look at this on a daily, get out this chart. Go here. Going on a daily, we have this wall here. If we can catch a reversal and get up here, I would say it's time to get real bullish on the US dollar, because now we have some confidence in our notes, but you just have to wait it out. In the blue conversion baseline, we are in the middle of it, but if we look on the daily, it's not enough volume, it's not enough pushing. So volume is trying to spike, but it's not enough to get that bullish momentum. So something to look at. This might be just a retest of the conversion line, just to see, hey, are we there or are we not? And then just like what we had here, test of the level, breakdown on the following week, continue bearish. So that's what we got there. Let's look at some commodities. Look at the gold market. Got GC1. All right, gold futures. Let's get on a weekly first. gold actually has me really excited. Been watching the gold market for multiple reasons. My main reason because gold is showing me the global confidence on what they want to do. Gold is like a safe haven, as everybody knows. It's not as liquid as bonds, but the thing is, when people are not confident in bonds nor government currencies, they're gonna move into silver, gold, things of that nature. And having this giant spike up this week is a great catalyst. If we can get into this cloud, break this blue conversion line, in which my green indicator right here is gonna give me a alert telling me, hey, it's time for me to just start jumping in. I've been telling a lot of my friends and family members start buying gold in this zone. And yeah, I think a few of my family and friends are pretty happy and listen to my advice. But anyway, so this is a good indicator, especially if you're a crypto trader. You're gonna start seeing some institution money flowing into the market, into your crypto. I know Bitcoin had a major fall, as people would say. I guess I wouldn't say that. It's just retesting the 6,000 level. If Bitcoin breaks the 6,000 level, even on going off subject, then I would say it's a bubble. But anyway, that's my thoughts on that. But this is actually my catalyst showing me, hey, we need money moving somewhere else. So just saying. But anyway, so gold is looking good and powerful. Let's jump on it on the daily. So this was on the 11th, which was on Thursday. This was the big pump, broke the conversion line on my base conversion line here. Giant spike of volume. Now this is the thing. We look at this red line. It's not a line that I created. This is what my indicator does. This was the ceiling here. And also, if we look, we just jumped into the cloud. So if we can break this level, it's game time, baby. It's time to really, continue investing in gold, because we're gonna get a lot of bullish momentum, especially as the whispers are in the market that we are gonna get into another recession. Not saying that we are or aren't, but gold is gonna be a great tool to have as currency. So with that being said, it's good to look at the gold market. Also, it helped with the Aussie dollar this week, keeping it moving with momentum. So that's also another catalyst of why the Aussie had some strength, because as their country, they actually do a lot of mining of materials like gold and other like nickel, things of that nature. So minerals, things of that nature. So it was a good week for the gold market. Love it. I actually love it. So let's get out of here. Jump into oil, the black gold. Take a look at the black gold right now. So look at the oil. Let's get into this on a week first. So on a week, we are extremely bullish. Last week we had this pin bar showing at this retest level. It's not happening. Also, some people may say this was our double top. So with that being said, if this is our double top, slightly curving to the downward, I wouldn't say it, but hey, if this is our double top curving downward, then it's time to really get a bearish here. But I won't jump in and say, hey, get bearish, because we actually retested the conversion line, didn't break it nor hold it. So I will have to wait for the next full week to really give my true opinion. But hey, it kind of looks like a double top pattern. So as a trader on a daily, I would say, hey, keep an eye out. If you can break this level and hold, stop until you get to the 55 level, wait, and then wait for the next future and keep on trading this. But yeah, I'm neutral, honestly, until I get this confirmation of breaking this blue conversion line. So let's look at it on a daily. This actually affected Canada extremely, unfortunately. So if we look at this chart here, because of the release of the news on the IMF downgrade on global growth, actually caused this catalyst to fall down on the 10th. And it was just horrible. It was just a lot of bloodshed on the market. A lot of people made money, unfortunately, but This is not a good sign for the Canadian economy. If we can just, get some other things pushing them back up, it'd be a beautiful thing. But right now, I see the Canadian dollar falling some more because of this oil, and also some other talks with a tweet from Trump. I think that was either Monday night or Tuesday night. There was a tweet that he released regarding the oil, how he feels about the oil companies in America. So, which that being said, it also affected Canadian because they are a major import and export of oil, in which some of our oil comes from them. So yeah, that was also a double pin bar on the Canadian dollar. So this is what we have. My opinions on here. It's gonna continue falling if we can break this level, this zone here. I'll get my highlight too. If we can break this area, cool. But this is right now resistance. We may have a bounce up and we'll have a pullback and then a continuation, break it down till we get to this blue cloud level. And as the cloud is thinning, this is also showing me, hey, we may have some bears coming in, but it all depends. We have to continue on the weekly and on the daily. So that's that. And let's get into the S&P 500. Everybody's been asking about that. I know in the chat group we went over it, but let's look at it for the week. So S&P 500, scroll all the way to the bottom. All right, so this is the talk of the week. We had a huge fall, not as big as people talk about Bitcoin, not being biased, but I just love how, Bitcoin has big falling days and it just it's not swept under the rug. But unlike the S&P, it fell dramatically, and you go, oh, this is normal, but this is not normal. This type of volume being pushed is not normal. Now, we have two major reasons why this is happening. In the stock market, they just stopped all the buybacks. So because and what is a buyback is, companies are allowed to buy their own stocks, and that pushed the market up for the last 2 years. And because that's what they was doing, they just released the news that the cutoff is coming up. So this is not a shock to me that this happened. I actually had a conversation with two of my mentors, and this seems normal. It just sucks because this is not the end of this bear momentum. If we look at this on a weekly, we're gonna jump into this cloud. I see this happening. What's gonna happen, in my opinion? We're gonna retest this level, break up, have a pullback, jump right into this cloud, get into this level, have a retest at this area because this is a old support level, and jump deep into this cloud. So this is not new. If you are a stock trader, I would say, hey, get enough money into your trading account so then you can have a margin account and be safe trading some shorts, because it's going to be a lot of blood in the market. And with that also being said, because there's so much blood in the market, I'd like to talk in a circle because I like to see the market as a whole. But this is also going to be another catalyst to be pushing up gold and certain crypto coins if you're into that. So yeah, this is a bad thing and a good thing. After watching the movie The Big Short, I don't like to get excited about when economies fall and markets are having bad times. I understand it's part of the cycle, but this is bigger than what we're seeing, especially this type of spike of a volume. So let's see what happens. Hopefully, we can keep on this bull. So let's get rid of these drone tools and move forward. So we went over the major things. We're going to go briefly on the Euro index, Japanese index, Canadian index, and the Switzerland index, and get right to the point of the currency pairs. So before we get into the index, let's look at the currency strength bar. So like I said, if you watched the webinar, I said Japanese yen is overbought, and we're slowly creating this double top pattern right here. So I really believe we're going to be falling deep, switching this. Like I said, for the Switzerland franc, it's oversold. It's only two options for the money to start going. And then we have this nice squeeze here all these other currencies, everybody's going to be making major moves here. So Canadian dollar, I will be watching out. Aussie, New Zealand dollar, and the euro. These three things are going to be making major moves this coming week. Anytime you have a squeeze, if you think about it like the bulletin band, I don't know how you pronounce that, but anytime you get a squeeze like this, big moves happen. So same thing here. Even though it's not compared to another thing, it's getting real tight, like a rubber band, stretching it out. So now it's gonna pop. Same thing here. We had some consolidation throughout the week, getting real tight. Not a big move. It's gonna push through. So definitely gonna be keeping an eye out on these major currency pairs. So that's why we're gonna be talking about U.S. dollar, Japanese yen, Switzerland franc, Canadian dollar, and euro, because I see some big moves. The only thing that can keep the dollar strength moving is the S&P falling and also the bond market falling, because now the money has to go somewhere. They need to strengthen the dollar. So also last week we had the report for inflation rates. Good news, hence why the dollar stays strong. So with that being said, I don't see the dollar falling anytime soon, especially with the FOCM minute report. Let's see what happens. Depending on what this news happens, may push the dollar in either or direction. I can't predict what these guys are gonna say, so I'm not gonna pretend to, like most YouTube video traders. I'm not gonna do it. But let's get back to it. So we have euro. So on the weekly, we have the euro also in the cloud. If you haven't saw the webinar on Wednesday, talked about this. If we can break out this cloud, cool. We can actually get bearish, like we saw on the Co2 report, how the commercial banks, go back up right here, they increased their shorts. So it's time to keep an eye out. We're pretty close to the baseline here. If we can break out this level, it's time to just be bearish. And also, we have this head and shoulders pattern on the weekly. So baseline, well below the baseline. If we can retest and break out of the cloud, definitely going to be really, really bearish. I have no true confidence to say I'm bullish until we get above the cloud. So as a trader, I like to say, hey, if or then options, just like computer code. So if we hit a certain level or we're above a certain level, then that's what I'll get into. But I don't make my trading decisions until Tuesday, Wednesday, and Thursdays. So if you're in our trading chat group, you'll see those alerts there. But this is just my market overview. So for the euro, I'm very neutral, because we're inside the cloud. We can move forward to the next currency, Japanese yen. JXY. So we had this pin bar last week, testing this level, and I'll show you this level here. So because of this level, we retested it in the past. It's been a strong level. So because we're testing this and our cloud is very thin, I can see us breaking through this, showing more bullish momentum, but all depends if we can break this conversion line. If we can't break this conversion line, I won't say we're bullish. So as well, I'm going to say be cautious and be little baby bulls, but don't be bullish. Baby bulls. Wait until Tuesday, or technically Monday at 8 p.m. Eastern time during the Asian market, and then you can make a decision. But I know the Nikkei is not doing well as well. So yeah, let's move forward. I'm going to just jump into the currency pairs just to save time. If you want to see more about this, you can actually go into our chat group. All this information will be there as well. So let's get into the Euro USD, my favorite. So like I was talking about on the weekly, we have this head and shoulders pattern. And now because we created this pin bar, and as you can see, I already have my baseline of where the market is really trying to say, hey, no, nanny. And in the past, this was a past level. So hence why I'm not fully bullish. I'm gonna really say I have to wait. I need to wait for the volume. If the bankers can push this down for us, I'm bearish 100%. I'm gonna be bearish until we get down here because this is a supply zone, and yeah, I've been waiting to get down here for a while, as you can see. So we just need that bearish momentum. We need that push. If we look on the calendar and see what we have coming up, we have the unemployment with the council meeting. Honestly, anything could fly because we're still in Bextrick. I can't even speak. I've been talking so long on here. But yeah, if we can get that going, that'll be the catalyst that I need. Now, if we look on this on our hourly and 4 hour, we actually have a strong pivot level on the monthly here. Hence why we couldn't break it. So if we can just push up off this, let's go on the daily so you can get a better picture. See this pivot point level and the 55 moving average. We have to break this. We're technically we can be bears. We really have all the strength. We just need the volume. And if you can see here, low volume within this trading week, we just need that volume to push us right in the right move. And this looks like a pullback in my opinion, because we couldn't break this 55 level and we're technically below the cloud. This looks like a retest level for me. So I'm just waiting for just the volume. If we can get the volume, I already know my price where I want to enter at. And it is what we're going to do. We're just going to follow the market. I don't like to predict the future. I just say what I need to do what I need to do. So I need volume, I need time, and I need price. And that's it. So that's what I'm looking at. I'm looking very bullish. I mean, bearish on the euro US dollar, honestly, in my opinion. Other traders on other social medias networks are saying the opposite, but hey, I'm a contrarian, I guess, by nature. So let's get into US dollar CAD. Yeah, baby. So US dollar CAD, have it over here. So on the daily, we have to break this pivot point for a monthly pivot point. If we can break through this, which strongly possible, because all this overbought, it was oversold for so long, so it pushed through. That's why for these few days the Canadian dollar had strength, especially I think that was last week. I think Sunday it just fell, and this was what I was hoping for, but we couldn't keep this strength. So I'm just waiting. As a bear. Canadian dollar, because of the oil market, like I said, it's not gonna have any good looks, but well above the pivot point on the daily. So if we can break this and then break out this cloud, I'm gonna be perfect. It's gonna be perfect. But I don't like trading in the cloud, so that's why we have the sideways action. So let's see what happens, But this would be my true level if we can break out. But we're above this 55, so we can only keep our fingers crossed and say, hey, we have some strength in the Canadian dollar. I mean, wow, I had this all reversed in my head. I apologize, guys. This movement here for the US dollar is perfect, showing that the Canadian dollar is very weak. Last week, I'm so sorry. Last week, we had strength for the Canadian dollar. Like I was saying it, but not looking at what I saw. And we had that strength for the Canadian dollar that last Sunday of the open for the I think there was the F&P report or something. Or NAFTA. Yeah, it was NAFTA report. So yeah, that's what happened here last week. So hey, we can continue with this bullish momentum for the US dollar, and the Canadian can continue weakening. We can just continue pushing up. Wow, I've really had a mirror moment. I apologize, guys. So let's move forward to US dollar Japanese yen. So, oh wow, why did I do that, guys? Sorry, I already have the chart here. Here we go. So, on the 4 hour, very, very bullish, right? But we have to break this level. Hit a whole number, right? See what we have on the daily. Well, below the pivot level, the cloud is down here. I'm bullish. So I'm going to say US dollar, weak. weak. The only thing that can happen that has me changing my mind, like I said, looking at my currency strength index, the Japanese yen needs to fall. So looking at this, if we can break this pivot point, I'm going bearish to this level. At this R2 level, it's going to create a double top pattern and fall down. I don't have much confidence right now in the US dollar, but I know because it compared to the Japanese yen, this is going to push. And plus we have these double dojis or spinning tops, I like to call them. This is my indicator that, hey, we're going to be pushing up. Also, we retested off of this 55 moving average on a daily. So I'm gonna stamp this as bullish. We're gonna be bulls on this one. Okay. And let's get into the last currency pair, US dollar Switzerland franc. Because now you know the fundamentals and also understand why I'm making these trading decisions, I can just go through this. So this I'm gonna be bearish, because like I said, we have this happening. This is gonna happen. I put my last dollar on this, that we're gonna get a push from the Switzerland franc, causing this to push down. Now we have some retest levels here. Get rid of that for now because of the cloud, but we're gonna pull up, come crashing. Monday we're gonna have that nice momentum up. Everybody's gonna think that, hey, we're gonna be bullish, but they're gonna get wiped out from the bears. The bears are gonna trap them. I feel like there's gonna be a bear trap, and also we have all this volume of a wall. We have a wall here, strong wall. Price wants to be here. It's not gonna break out this level. Plus, we're kind of overbought. If we look at this on a weekly, this is a strong level. We can't. We just broke out of this level. I know we just broke out this level of the supply zone and wants to get to this supply zone, but we don't have enough strength yet. So, because we're not breaking this level, we're going to continue coming back down just for a week. I'm not saying for the whole future. I'm just talking about next week. We're going to be very bearish. So those are my trades. You can, if you like the video, give us a like on YouTube. Comment if you have any comments, good or bad. If you want to follow us on our trading group, it's called 24FX. You can actually hit the link at the bottom of this video. It's going to be in the comments. Join us on Instagram. And if you have any questions or concerns, you can message me or Paul on our private Instagram. I know mine is Ask for Travis, and Paul is La FOXEX, or AK Love. Let me just pull it up. Apologize. He's gonna kill me. Like, hey, you chopped up my my Instagram name. But give me a second, I'll pull it up. And then Paul is Paul Man FX. Wow. I just chopped up his whole Instagram name. But hey, we're human. So thank you again for watching 24FX weekly update, and take care.